Hello, my name is Beatrice Mwangi, a research analyst at Cytonn Investments, and today we're going to be looking at the real estate sector. We're going to highlight the factors driving the sector at the moment. We're also going to look into the key challenges that are also facing the sector. We'll delve into the performance, and last we're going to look into how an investor can focus in real estate. The real estate sector has continued to perform well compared to other asset classes. Looking at the performance as at the end of last year, the real estate sector recorded average returns, a 5-year average return of around 20.1% compared to other asset classes at around 8.1%. We attribute this to several factors, one of them being the positive demographics, that is the high urbanization rate in Kenya, the high population rate at around 2.5% compared to the global average at 2.2%. We also attribute the growth to the continued support or continued focus on the affordable housing initiative by both the government and the private sector. And this focus is evidenced by the increased projects mainly focused on the low and middle income population. Another factor that has led to the increased activities in the sector is the continued or sustained infrastructure development, with the government continuing to focus on finishing or maintaining infrastructural projects in the country. Looking at the challenges facing the sector, the main challenge has been the inaccessibility of financing given the capping of the interest rate at 4%. The cost of credit continues to be high at around 18%, making it hard for investors to access funding for their projects and even home buyers to access the same. Another challenge is the lack of development class land. Areas where we have this land has become very expensive, and this has crippled development by keeping away interested investors. The main factors driving the real estate sector at the moment, one of them is a continued focus on affordable housing by both the public sector, that is the government, and also the private sector. And this is evidenced by the several projects you've seen upcoming in various areas within Nairobi and even outside Nairobi, focusing on the low and middle income population. Another factor is devolution. There's rather increased activities in mainly county headquarters, and this has resulted in increased demand for real estate. Another factor is the positive demographics. Kenya has a relatively high urbanization rate at approximately 4.3% and a high population growth rate at 2.5% compared to the global average at 2.2%, and this has thus resulted in increased demand for real estate services and mainly residential sector. Another factor that has led to increased activities in the real estate sector is a sustained development, that is in terms of infrastructure, development of sewer lines, expansion of roads, construction of new roads, and even electricity connection. This has resulted in the opening up of new areas for development and thus attracting investors into such sectors. Another factor is devolution. There's increased activities in county headquarters, and this has led to increased demand for real estate services or facilities, that is housing in terms of retail spaces and even offices. Another factor that has resulted in increased activities in the real estate sector is the growing hospitality sector, driven by the growing number of tourists or that are domestic tourism, and also conferences and meetings happening in the country. This is because Kenya is recognized as a regional hub, and this has made it more preferred by delegates for meetings, and this has led to increased demand for facilities, especially in the hospitality industry. And finally, the high returns in the real estate sector, outperforming other asset classes, has also led to increased concentration or increased focus on the real estate sector, and thus we continue to record increased activities. In terms of challenges facing the sector, the key challenge has been financing. Given the interest rate cap that is still in place, the cost of credit continues to be high at approximately 18%, making it difficult for investors, developers, and even potential home buyers from accessing financing. Another key challenge of the real estate sector is an affordability of mortgages, and this has crippled the residential sector. This is mainly because 74.5% of Kenyans earn approximately 50,000 per month and below, and this has made them unable to afford mortgages, with property prices escalating every year. Another key challenge facing the real estate sector is the increased supply, mainly in the commercial sector, with the office sector recording an oversupply of 5.7 million square feet, and the retail sector having an oversupply of 2 million square feet as at Q1 of 2019. This has led to reduced occupancy rates to an extent of having the landlords reducing their rent fees just to maintain their occupancies at their buildings. We now look into the real estate performance. In general, the real estate sector recorded subdued performance, mainly because of the existing oversupply, in addition to the inaccessibility or unaffordability of financing. For the residential sector to start with, it recorded a rental yield of 4.3% compared to 5.5% during the same period last year. In the retail sector, the rental yield came in at 8.2% compared to 9.7% in half one of 2018. In the office sector, the rental yield came in at 7.8% compared to the 9.3% recorded during the same period last year. Another key challenge was financing, given the interest rate capping, which has led to a high cost of credit. Then this has crippled the real estate sector as investors are not able to access financing for development. The real estate continues to perform way much better compared to other asset classes. We now look into ways of investing in real estate. There are two main ways of investing in real estate in any market, and the first one is brick and mortar. This is through the development of buildings or the purchasing of land, with the investor expecting to raise or to gain from the price appreciation, the capital appreciation, and also rental income. The second way of investing in real estate is through real estate investment, and this is the conversion of physical real estate assets into a liquid investable product. This can either be public market tradable like REITs or privately placed. The key challenge facing brick and mortar, first one is the liquidity. Brick and mortar assets cannot be easily converted into cash, given that the lacks official platforms for transactions, in addition to pricing, which remains opaque in the Kenyan market. Another challenge is the capital intensiveness of the asset. For an investor to invest in real estate, they require a huge capital outlay, and this causes most of them to resort into the expensive bank debts. So for the traditional way of investing in real estate, it has a quite simple process. The first one being the deal origination or the site acquisition, that is acquiring of the property on which the developer intends or the investor intends to develop. That follows the preparation of the business case, which is mainly supposed to determine the viability of the project, the idea of the project. This looks into the concept, looks into the finances, how it's going to be funded, and even the revenue streams that are going to be there. Once that has been determined, that's meaning that the business case is viable, then the investor goes to the next phase or the next stage of the process, which is the pre-development. And this is the preparation for the actual construction or the actual development of the proposed development. The other or the fourth step is the actual construction, where then the implementation of the project is realized, and this takes 2 to 3 years depending on the size and the concept of the project. And the last step is the exit step, where the developer or the investor concludes on the project. This looks into issuing of title deeds, issuing of certificates of occupation, closing of accounts, and preparation of reports, and also the evaluation basically of the project to see that whatever was planned in the business case has been achieved at the end of the project. There are also other sharp investment options we have in real estate. The first one being through equity. This is where an investor has partial ownership of a real estate investment vehicle, and this usually is an investment of 3 to 7 years depending on the size of the project. And given the high risk of this investment, or the targeted return is around 25%. Secondly, it's through mezzanine. This is where an investor provides subordinate financing to real estate development. The investment horizon for this option is 1 to 3 years. Given that the risk appetite for this investment option is moderate, the targeted or the demanded return is around 14 to 15% per annum. And finally, the third sharp investment option in real estate is through project notes. This is financing construction through fixed income notes backed by real estate. And the investment horizon for this option is around 1 year, depending on the milestones of the project. For this investment option, it demands a return of around 18%. This is because of the leverage it holds, given that it finances 60% of the project. For this and much more on real estate investment, kindly join us during our wealth management trainings held every other Saturday at the Chancery Office's 6th floor. And you can also register for the same at cytonn.com/PWMT.